Hey guys, welcome back to the channel. In today's video, we'll be talking about accounting automation, and we're going to be answering the question whether accountants are going to be replaced by machines in the future. So a lot of you have been asking me in the comment section of my videos on what I see as a corporate controller today in the accounting job market, how the jobs are being impacted by automation. So the short answer to that is that some of the accounting jobs are going to disappear in the future, but not all of them. So the purpose of this video is to highlight the areas in accounting that are being automated so that you can stay ahead of the curve and apply that to your career. And because this is such a rich subject and topic, what I'm going to do is I'm going to create a series of episodes on accounting automations. Each of the episodes will discuss one of the areas of accounting. So today's episode is going to be about bank reconciliations, and then we'll create other episodes about financial reporting, internal controls, cash disbursements, billing, so on and so forth. So this is the subject of this video today. Stick around. All right, so today we're talking about bank reconciliations and the effect of automation on bank recs. So for you to understand fully the context, I want to take you back on a trip back in time on a time machine. So we're going back to the early 2000s. We'll look at how bank reconciliations were done back then, and then I'm going to show you how bank recs are being done today in terms of systems and automation. And then I'm going to show you what I see things are going, the trends that are happening today, and where I see that going in the next 5 to 10 years. So let's jump in. I'm going to show you everything I got. All right, but real quick, let me define what a bank reconciliation is for those of you who are not familiar with bank recs. So a bank reconciliation is the process of comparing your books and records to the bank statement, making sure you're capturing all the transactions on your books and records from the bank, right? And if they're not complete, then you go ahead and reconcile the books or record the transactions that are not in the books. So the process goes like, if you have your ERP software, so this is your ERP. On one end, this is where you have your transactions, and this is the bank statement. A bank reconciliation is simply making sure these two are equal, right? So you're looking in your system, you're looking in the bank statement, and making sure that the transactions that are in the bank are recorded on the books. So this is very simply the process of bank reconciliations. And now let's dive back into time and see how the bank rec was done back then, and then today, and then in the future. All right, now let's go back in time to the early 2000s and see how a bank reconciliations was being done back in the day. So back in the early 2000s, we used to have an ERP just like we do today. So an ERP system, this is where you keep your books and records, right? ERP stands for Enterprise Resource Planning. This is where you typically would keep your accounting transactions in the accounting software here. So we used to have a general ledger for our cash, right? And we used to have the actual physical bank statement. So this is the bank statement in physical format, an actual paper copy. And we used to compare the two and eyeball it and look in the bank statement and then look in the ERP software and make sure that we have all the transactions that are in the bank are in the ERP. And the way that we used to know that they balance is that if the balance at the end of the month here matches the balance at the end of the month in the ERP. So this was very manual, and we used to do it from a physical copy of the bank statement. And as you can imagine, this was very time consuming. On average, you would take one accountant, if you have a lot of transactions, one accountant, 1 day to get this done, right? So what we used to have is 10 bank statements or 10 bank accounts. And we used to have a 5-day close, right? So we need to close the books in 5 days, 5-day close, which meant that in those 5 days, you needed what? 2 accountants, right? That are working on this. So 2 accountants for 5 days, dedicating their time to getting the bank to be reconciled so that the balance at the end of the month on the books matches the bank statement. You need 2 people for 5 days doing this. So this was done back in the early 2000s. Now let's jump back in time to today and see how this same process is being done today. All right, so today, how we're doing bank reconciliations today. So we are taking the transactions also in an ERP software. ERP. BSP. This is where we keep our books and records. And we have the bank statement, instead of being in a physical format in PDF, now we can download a CSV or Excel file from the bank. So we go to the bank website, we download this nice Excel file, right? So this is Excel. We take that Excel file and upload it into the ERP software. Then the ERP software will do a match, right? So it will do a match based on a couple of different things, the dollar amount or the vendor name by looking at the character, the actual name from the upload from the CSV file, and to the actual invoices in the ERP system, and make a match, and then it will spit out an exception report, right? So then you get a exception report, and then in the exception report, these are pretty much all of the transactions that the system couldn't match for whatever reason. If there is no invoice in ERP to match it, or it couldn't find the actual vendor in the system, or for whatever reason, then the accountant can look at this exception report and then make some decisions based on that and record the transactions in the system. So with that, instead of needing two accountants like how we used to see before when we looked at the early 2000s, we needed two accountants to be able to reconcile the bank statements. Because you're doing a CSV or Excel file upload into the actual ERP system, you can do with one accountant, right? So you need one accountant to do this process of reconciling those 5 to 10 bank statements at the month end, because now you are uploading an Excel file into the ERP software. So as you can see here, the trend that instead of using two accountants, now we're using one, right? So in the process, in this 10 to 20 years, one of these two accountants had to do something else, right? So the jobs are being kind of shifted around. This trend is only going to continue. So in the future, if you're gonna adapt to what's going on with this automation of accounting, you will thrive. You will do really well, actually, if you can implement these kind of automation and efficiencies. Then you can actually make more money in the future. If you are gonna continue to do things the old way, things are not going to go well for you, and you're very likely to lose your job, right? So I want you to all listen to this as a warning message for the future. And I'm going to show you here in a second how bank recs are going to look like in the future, right? So this is maybe the more scary part, right? But this is how it's being done today. And I want you all to adapt to automation, figure out more efficient ways to do things so you can actually make more money today and be safe at your job, right? So this is how it's done today. Let's jump into how I see it happening in the near future. All right, bank reconciliations in the near future, right? So I'm talking about as early as 2025, right? And honestly, I'm seeing this being done today in some companies, right? If you see how some companies are doing accounting today, if you go to a big company, especially like Google, Facebook, Amazon, it's scary what's going on out there, right? How automation is taking over. But I'm going to talk about just the normal, medium to large size company, how the bank reconciliation is beginning to happen today. And in 5 years, or by 4 or 5 years in 2025, this is how I see a bank rec being done. So very simply, the bank rec is done in a very similar concept. This is your ERP or your accounting software where you keep all your books and records. And this is the bank on the other side, right? So this is the actual bank. Now you can do an actual integration between the system of the bank and the ERP software. So a lot of banks today are creating processes to integrate through open source integration with the ERP. So the one example, for example, is NetSuite. So if we're talking about NetSuite today interacts with a lot of banks. So a lot of banks are building their software to match the software of NetSuite itself, so that the transactions can flow from the bank directly into the books and records, right? and then the ERP software is then making all kind of machine learning and AI to figure out which transaction belongs where and record it on the books and records, right? So this is machine learning. So the integration between banks and ERP is causing the life cycle of the bank reconciliation to be shorter, because now you don't even need to download the actual Excel files, save them, upload them into the ERP. You don't need any of that. The transactions are flowing directly from the bank into the ERP software, right? And this is already happening. This is not, futuristic, but by year 2025, I see this being the norm, right? This is going to become the future. And honestly, it makes a lot of sense, right? Why would you spend a lot of time getting files, uploading them, when you can create an actual integration between the bank and the ERP software? So this is the future of this transaction here. And the way this is going, so then the bank transactions go into ERP, ERP does the matching, and then it will also spit out an exception report. Right, so from the exception report, you still need the accountant to look at the transaction, but you need a lot less of their time, right? So in the previous section, we talked about today, how we're doing it today, and we said we need one accountant. With this process here, you need half an accountant. Obviously not half a person, but half the time, right? So instead of one accountant spending their full time in the 5 days in the beginning of the month doing this bank reconciliation, you need 2.5 days, right? So you need half of the capacity of one accountant to do this work, right? So, so now all of a sudden we're needing kind of half, right? So you see the trend. When we looked at the early 2000s, we needed 2 accountants to do the same bank reconciliations. When we looked at it today, we need 1 accountant. You look at it 5 years down the line, you need half of that capacity, right? So it went from 2 accountants to half an accountant as a capacity. And so this is like went down to 25% to what it used to be. And so my advice here, and this is gonna echo throughout this episode and this series on accounting automation, is that you really get into automation and adapt it, and not only adapt it, but recommend it to your company, right? So go out and figure out what is the next step in automation and recommend that to your manager so that you're staying ahead of the curve. So in the future, the accountant that's going to make most of the money is the accountant that's going to drive this automation, implement it, know how to troubleshoot it, and all of this stuff, right? The accountant that's going to continue to do things the old way is very likely to lose their job. So that's it for this video. If you liked it, give it a big thumbs up. If you think one of your friends can benefit from it, go ahead and share it with your network, and I'll see you in the next video.